how VCs get a hold of all these tens of product, and how do they evaluate, and how do they mitigate the risk factors in all the products that they invested?
Well, there's a couple things. One is you have to keep in mind that VCs are in a portfolio, right?
Hmm.
So they can take an outsized risk with any one investment because they've got all the other investments, right? They won't all fail, hopefully,
Yep.
right?
Yep.
So, and the ones that are successes are such big successes that they cover up a lot of failures.
Yep.
You only lose your money once, but you can make it back 10x on a great deal. I mean, I think some of these things like, how did this product raise all this money? Like it doesn't make sense. A lot of it is the connection, the track record of the team,
Hmm.
the ability for the CEO to be a fantastic salesperson and sell the dream. Like I said, a lot of VCs are happy to take really big swings knowing that they're going to miss some of the time. And it doesn't matter that much to they if they miss, but to the people at the company, it matters a lot, right? Because it's their only job.
Yep.
That's one of the real differences between those two sides of the table, if you would. For each deal, VCs usually try to mitigate the risks that they can identify with technology. You might make sure that the team hires some really strong people in certain areas to make sure that they get that tricky part of the product best done, or you're hiring people that really know the customer set. They've got existing customer contacts, so that helps jumpstart the sales process, etc. Or, you try to carefully do the business plan of, how much money you're going to give the company and what they'll have to show at that point, and, have the discipline to say, this isn't working. I'm not going to fund this any further,
Yep.
particularly for very early stage investing, for seed investing.
Yep.
Not every seed investment deserves a follow on investment.
Yep.
Like if they're inherently risky, some percentage of them should not go further.
Yep.
But for each individual company, someone's got to make the decision. This one is not going to go further. And not everyone will even agree with that decision.
Yep.
The people at the company tend to have blinders on. They really think like this is the best company in the world and we're doing the greatest thing ever. But the objective data may say otherwise.
Yep.
That's how VCs try to balance the risk and mitigate. But the most important mitigation is that they've got portfolio of companies.
Yep. Yeah.
The particular concentration of risk for one company
Hmm.
is still an isolation of risk in their portfolio.